Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for June 27th, 2024. Well, we had some interesting data last night that kind of surprised with Micron disappointing, pushing back lower. You can see this morning it's already trying to push back up just a little bit. And Levi Strauss also disappointing, and that is trying to head lower yet this morning. So consequently, we have a market with heavy anticipation of data today and a little bit of uncertainty about what happened in those earnings. So first off, let's take a look at what happened overnight. We had Asian markets lower across the board. Looking pretty darn bearish. As a matter of fact, the Hong Kong market, which is very tech heavy, fell over 2% last night. Shanghai was also down, falling once again, staying well below that psychological 3,000 level on Shanghai, and the Nikkei had a pretty strong move, being down 0.82% as well. If we take a look at European markets this morning, European markets are relatively flat. At the moment, we have the DAX trying to hold a little bit of green, trying to push up, but the FTSE and CAC are lower, with the CAC being the worst off at the moment. Lots of nervousness about that French election, so we'll have to keep an eye on that. Markets this morning in the U.S. are also a little bit on the bearish side. We've got red across the board this morning, but remember, just heavy anticipation about data today, so everything can change once these data points come out. So just kind of keep that in mind. If we take a look at oil this morning, oil's trying to bounce up here. We saw numbers yesterday with a build in oil supplies, which really kind of leans to the fact that there is a demand concern that U.S. consumers are slowing down. But that being said, oil is trying to move up this morning, up 33 cents, and Brent is up 34 cents. Natural gas is also trying to rebound just a little bit, up about 2.5 cents right now this morning. If we take a look at our precious metals, interestingly enough, we've got gold trying to surge to the upside this morning. As a matter of fact, gold futures at this very second are up $12.60 an ounce, trying to move higher, as it looks like we may have a weakening of the U.S. dollar here this morning. If we take a look at the other precious metals, however, silver still lower, copper, platinum, and palladium all lower here this morning. And then if you remember yesterday, we had a little bit of pain in the crypto markets, but we've got Bitcoin bouncing this morning up at 225 per coin, trying to rebound, but there is a mix in those cryptos. If we take a look at bonds, well, here's one of the problems that we have, and probably one of the reasons why we're flip-flopping around in prices here on a lot of things. The 2-year bond is moving up to 4.75%. We've got the 10-year bond at 4.33% and the 30-year bond at 4.46%. And that's just reflecting that worry about the data coming out today, and maybe just a little bit of concern from those earnings reports that perhaps the things that we have been seeing, and some of the internal things like consumer sentiment, consumer confidence, things like that the consumer is slowing. And we're going to get another big reading on that today with the durable goods orders. So keep an eye on this. I would expect some wild volatility here in the market as we move along this morning, as these data points come in. It could be bullish, bearish. We could end up going sideways. Let's after looking through all of that data, how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts. Let's try to remove a little bias here on our day. Let's try to focus in just directly on the price action of the market and see if we can gain some information about how we may want to approach the market for today. Well, first off, just looking at this price action in here, you can see this is still a very bullish chart. We did rest, pull back in here, but we ended up holding this price support in here yesterday in that chart, and the possibility that we could be creating a higher low in that index. And looking at the diamonds, you can see we're poised for a nice upside move if those bulls can find inspiration today. But we can also see that problem here that, well, we could, if we get some bearish inspiration, we could pull back pretty hard, testing this trend or testing some support here in the chart. So if the bulls find inspiration, let's take a look here first. I would want to see a break of that resistance, and I think that could happen in a gap up open really easy, depending on how the data comes out today. And then we'll start looking for this resistance here in the chart that you see that we tried to break through, but then ended up respecting by the end of the day, pulling back. If that one were to break, then we're going to start looking for levels up in here and then pushing up toward these recent highs in the market, and then of course breaking through up here, all-time highs possible. Now if the bears find inspiration today, you can see breaking this tail would be the first step, and breaking that support that runs across here. If that were to, if we were to get bad data, I could see us gapping through that pretty easily here this morning. Now, beyond that, we would come down here and maybe be testing this upside trend to see whether that holds in this support area in the chart. We'll want to be watching that closely. If we were to break down through there, notice we've got this longer term upside trend out in here. That might catch us. So we've got kind of a little triple whammy of potential support right in here on the chart that we'll want to be watching closely. If we happen to get bearish data and we really start driving lower, keep a close eye on that. Now if we take a look at our SPY, there's nothing bearish at all in the SPY. This is just a bullish chart, and we continue to see that very thin situation here where just a small group of big techs continue to hold this index up while the majority of stocks are moving sideways to lower in the S&P 500. And how much longer that can continue, I don't know. But we certainly have a nice little resting consolidation area here in that chart. So if the bulls find inspiration here today, couldn't see any reason why we couldn't pop right through here. In fact, I can't see any reason why we couldn't gap all the way above to new record highs today based on how that data is received. And then of course, if those bears are inspired by there, I certainly couldn't see any reason why we couldn't gap to this support area and possibly even down through that trend, and we would start looking at some gap fills here in that chart, looking for bigger support areas if those bears were to really engage. I'm going to say the same thing is true in the QQQ. Nice little resting consolidation here as that uncertainty of the data. We've been kind of very choppy, very light volume here in the market. Once again, good data today. Absolutely no reason to believe that we couldn't gap right up here to test those all-time highs and even have blue skies coming into play at the open of the market. If the bears were to find inspiration today, pushing down to test this support would be the first step. And if we were to push down through that trend, that's where things get really interesting here in the market, and certainly possible with the data that we have today. And then we start looking at gap fills and bigger support areas here in the QQQ as well. Now, if we look at the Russell, although the Russell rebounded and bounced back up yesterday, there is nothing about this chart that's bullish. IWM continues to struggle, and the reason is because we don't have any big techs in IWM, and without the big techs, not much else is going on here in the market. So if those bulls were to find inspiration today and really pop this market, first step, break through here. And then we'll start seeing if we can break up through these progressive areas of resistance and downtrend in the chart, pushing on through, and then coming on up in here. See if we can push up into there. If the bears, however, were to find inspiration today, I would be watching for a push down to test this level of price support first. And then if that fails, back down here looking at this bigger longer term trend line that we struggled around for so long. We'll watch that. Beyond that point, it gets really interesting. We start moving sharply lower here, potentially in these support levels of IWM if the bears were to really get going to the downside. If we take a look at our VIX, interestingly enough, we have no fear at all being shown in the VIX. It's as if no one has any concern at all about this data coming out. Kind of interesting the way that this market is reacting. If we look at this downside break, we are certainly holding that possibility of a little bit of a hold of support in here. If those bears were to find inspiration here, start looking for that push to the upside. One thing you want to make note of is with that slide yesterday, we actually broke this little upside trend to the downside, showing no fear at all here in the market. If those bulls find inspiration today and we start pushing this down, every reason to believe we will break down even lower, test this area of support, maybe even breaking it on through. And I think coming back down here is very possible, and possibly even lower if that data is supportive of the bulls. So watch that carefully. Now our T2122 is giving us some hope of a relief rally at the end of the day yesterday. Whoops, there's our T2122 giving us some hope of a relief rally. You can see we hooked this over to the upside as we bounced back yesterday afternoon. We had that relief coming in. So this tells us we have some bullish upside opportunity, and of course this is what also helped that VIX go lower yesterday as that bounced back up. Now, heavy anticipation on these data points today, and I don't think anybody can tell me without just straight up gambling and prediction which way this is going to go based on the data today. So if the bears were to find inspiration, look for that opportunity. We could push down in here into the bullish reversal zone. If those bulls find inspiration today, every reason to believe that we could stretch this market hard back to the upside and appear nearing the bearish reversal zone very, very quickly. So watch that carefully today. I'm anticipating some pretty big potential moves here this morning. If we take a look at our T2108, unfortunately T2108 didn't perform all that well yesterday, continued to decline. But the good news is it finished above this recent low, and that little hockey stick down here on the ice is kind of suggesting that, again, that relief bounce could be in play. Watch this area here. A break of that downtrend would be really important if those bulls really find inspiration today. Every reason to believe they could, so watch that carefully. And then, of course, if the bears find inspiration, well, we could easily break that support, and I would say the possibility exists. We could seek out much lower prints here in T2108 if those bears were to really engage. You can really see the weakness of the overall market beyond what the big techs are doing here, with the majority of stocks well below their 40-day moving average. 32% of the stocks only 32% of the stocks holding above their 40-day moving average. T2107, very much the same thing. We saw weakness coming into that. In fact, early in the day in that selling, we were down below this area of the chart. But notice right in here at the end of the day, we rallied back up a little bit, holding support. We're still in this downtrend. We've got bigger downtrends in here to worry about as well. And we've got about 50%. 50.33% of the stocks holding above their 200-day moving average, which shows the internal weakness of this market, even though big techs continue to hold the SPY and QQQ at or near those records here in the market. We have lots of weakness in many other charts out there. And then if we take a look at our T2101, well, we can see part of the problem here is the breadth. Now, I would suspect breadth is going to get a boost of energy today with some volatility. Your guess is as good as mine whether it will be up or down. But watching this closely, as you can see, breadth in this market continues to decline dramatically because we have such a thin market of leadership that we're having trouble here holding breadth, and we're reaching some pretty low areas here in market breadth. So look for some volatility today, and we could spike up on a bearish move, we could spike up on a bullish move. Kind of all depends on how the market reacts to these data points. If we take a look at our economic calendar for today, well, we've got what I've been talking about here is all of this data that will be coming our way today. Let me see if I can size this correctly. I got to do that ahead of starting the video. If you can look in here, we've got durable goods orders this morning. This could be an interesting one based on the weakness of the consumers that we've been seeing in some of the data the last couple of weeks. Notice in here that consensus is suggesting that durable goods comes in at 0.0. Pretty substantial decline there. Ex-transportation coming in lower and lower, and we've been seeing some of these consumer numbers actually miss to the downside, so watch carefully here. Of course, market could celebrate if these numbers are stronger than expected. They could really be unhappy if they are weaker than expected. Then of course we're going to hit this GDP number. By the way, these both happen prior to the market open. Nothing you can do about it. Whatever happens to the market happens, and it'll happen before the market opens. And you can see in here GDP, they're looking for that to come in at 1.4, up 1/10. Watch that closely here, and they're saying personal consumption stays at 2.0. I'd watch that carefully because we've been seeing all of these readings that we saw in Levi Strauss that the consumers are slowing down. And then if we take a look at international trade in goods, that'll be coming out as well, looking for a $95.8 billion deficit in international trade. That would be an improvement. Watch that one closely as well. Could be an interesting number if that misses. And then we're going to get those weekly jobless claims, which of course have been pretty problematic for us. Keeping an eye on that. We've got consensus suggesting 236,000 for today, so watch that carefully. Remember, we've been getting lots of data about these numbers being heavily overstated. As a matter of fact, you've probably seen that story out of California that all of 2023 job estimates was a lie. So, or job creation was faked. So big problems here in these numbers, so watch that carefully. And let's take a look. We've got corporate profits after that, retail inventories, wholesale inventories, pending home sales will be coming in, natural gas report, and then as we move throughout the day, we're going to have some bond auctions, a Fed balance sheet, and we're going to be thinking heavily about what comes up on Friday, and that's going to be that personal incomes and outlays number, which would be the Fed's favorite reading on inflation. Watch carefully for that. Will be quite a little bit of anticipation on that. Chicago PMI, consumer sentiment again. We've got Bauman speaking, Barkin speaking as well. Baker Hughes rig and farm prices in there coming up on Friday. So be prepared for some volatility through the end of this week. Will it be bullish, bearish? Will we end up going sideways? Well, your guess is as good as mine. Let's take a look at the earnings calendar here today. Now, the earnings, we've got more earnings today to be paying attention to. This morning, we've got AYI reporting this morning. It looks like we've got a little bit a lower move here on that so far this morning. APOG will be reporting, popping higher this morning. LNN, oof, that's a big old whipsaw there in the pre-market on that. Who knows how that's going to open? Watch that closely. MCK will be reporting this morning. SMPL will be reporting this morning, and WBA will report. Looks like we're already moving a little bit lower there on Walgreens. After the bell, those are the notables for this morning. After the bell, the notables: Nike is going to report, and ACCD will be reporting after the bell today. So keep a close eye on some of those here for today. So let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube, and then also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful, to be helpful to your trading, if you could do me that favor, leave that brief comment, thumbs up, brief comment, all of those kind of things. Helps the channel to continue to grow. And I know it gets tiresome doing that day after day on a daily video, but it does help support the effort for putting these videos out every day. As you can imagine, it takes quite a bit of time to pull all of this stuff together. So thank you to everyone who does take the time to do that. I truly, truly appreciate it. You guys are awesome. Let's take a look at some of these stocks that could be setting up. Remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful. Remember, always follow your trading rules and your trading risk tolerances. Never ever blindly follow anyone else's trade ideas. So first off, let's take a look at a few stocks that I really like and have placed alerts on, watching them pretty closely. Take a look at CRM. I love this nice little tight consolidation that we have in here. I call this pattern a pop out of the box pattern because you can literally draw a nice tight box around that pattern. The pop out of the box is one of my favorite trading patterns within a trend, and you can see we've got a nice little upside trend, and the reason I like them so much is they create a relatively low risk entry to a trade. So I would be favoring this to the upside here. I would, and you can see I've placed a price alert right here over the top of that box. If this were to pop in here, I want to know about it, and my stop loss would have to be right underneath that consolidating area in the chart. And notice I've got a nice little upside gap that could be filled here in the chart if CRM can break higher. So keep an eye on that one. NetApp continues to set up. Yesterday it tried to go, and if you're in that trade already, no particular worries. Get that stop loss set in there. Hold that area in that trade, and you can see in the pre-market we're trying to pump again here on NetApp to the upside. Keep a close eye on that. For those of you who like longer term trades, one of the members of RWO brought me this trade idea, and I really like the way this is setting up here on Hanesbrands. This is a weekly chart, looking for that opportunity here on Hanesbrands. For that to hold in here, nice little weekly upside. And you can see if I look at a weekly moving average chart, well, we're right in there on that 50-day moving average, little moving average squeeze, capable of firing off in here, and a nice upside potential on that Haynes brand. So I'll be watching that closely for one of those longer term positions that I truly like and truly love. As a matter of fact, I'm going to be talking about those things more and more as the time goes on. Take a look at Walmart. Walmart continuing to hold this beautiful pattern in here, little Morningstar type pattern completed yesterday. We might rest in here just a little bit depending on how the data comes out, but that is a nice looking pattern here on Walmart. Costco continuing to hold this price support. Now it has slipped past this trend, so you do have to worry about it a little bit, that maybe we could be forming a bit of a head and shoulders type pattern in here. But if those bulls find inspiration today, then we could certainly pop this on through, moving to the upside. So keep a close eye on that. Looking pretty good. Let's take a look at oil. Interestingly enough, even though those data points yesterday, or our oil supplies came in showing a build in supplies, oil continued to hang in there pretty well, and some of the oil sector stocks hanging in there. So if I click this one icon here on XLE, that's one of the reasons I think TC2000 is one of the best pieces of software out there for charting. Just one click and I can get a list of everything that makes up that ETF. Take a look at Hess Corporation. Hess is holding up this potential higher low in the chart. Now clearly we still have to worry about this downtrend, but potentially holding this higher low, and you'll notice in here we could be forming an inverted head and shoulders pattern. So there are some good charts in this sector to be paying attention to. ConocoPhillips, although it pulled back yesterday, breaking through this downtrend, trying to hold a higher low, and you can also see that possible inverted head and shoulders pattern in that chart. Halliburton trying to come up out of the bottom. Phillips 66 has slipped out from underneath its trend, trying to round this bottom over. So there are a few stocks out there to be paying attention to in that sector if you have an interest there. Let's take a look at our financials here. Our financials went through a stress test yesterday, and apparently they came through okay in their stress test, but just the worry about why they're doing a stress test pushed us down lower yesterday. And of course the dollar really surged up yesterday, strengthening on the day. So keep a close eye on XLF here. Could be an interesting day today with the data that we have coming. If we get any hint of a weakening economy, watch for the possibility that this could break this support here in the chart. However, if we show strength in these numbers and a good bullish move, we could use this area as a launch board and continue to see those push back up. So it's going to be very data dependent today, but watch that closely on those financials trying to show some strength. Now, I do have a little bit of worry on some of the pay systems out here like Visa. Visa falling pretty sharply here, and you can see breaking down below some support. Keep an eye on that. MasterCard also broke through this downtrend resistance, and this is one of the stronger of the bunch, trying to hold a higher low in here. So this may buck the trend of other pay systems out here, that opportunity that could push on through. But watch this closely. If it breaks this support, I would look for a retest of these lows pretty quickly. And then even things like SQ trying to break through, but again starting to show that weakness here again. Watch this closely. It depends on how the data comes out. We've got that chance that we could go either direction, and we could do that in a pretty quick hurry. So keep an eye on those. Let's take a look at some of our tech sector stocks. Obviously, Microsoft, despite the fact that the EU is accusing them of monopoly rule breaking here, they continue to hold in here in this nice strong pattern. Now our trend is all the way out here. Be a little bit careful here on this, But that worry for Micron may have a little bit of a change here on this on Microsoft, depending on how the data comes out today. So keep an eye on that. Google has been extremely strong, very bullish pattern, big breakthrough of resistance here showing the upside, but we've got a little bit of concern here on AMD. AMD continuing to move in this downside channel, and I think setting up a short opportunity here in AMD. So keep a close eye on that. And then if we take a look at some other areas of the market, take a look at what's been happening in Coke. Well, we're seeing a little bit of defensive sector stocks picking up. Coca-Cola picking up here, pushing to the upside. Nice little consolidating pattern up here starting to form against that resistance. If we can pop on through there, well, then you can notice we've got some highs that we could start stretching out here on Coke. Now, this is an outlier because if we look at like PepsiCo, well, PepsiCo's not happy at all. It did break that downtrend here in the chart, but we're struggling with price resistance here. So we've got a mix in data here overall. Take a look at Colgate. Colgate, unbelievably strong here. Colgate just continuing to rip to the upside here this year. Nice little resting pullback coming into that. Again, defensive sector, dividend paying stock, looking good. How about AT&T? AT&T, very strong dividend paying stock, pushing up, breaking through some resistance. Any rest or pullback sets up an opportunity there as well. So watch those closely. So with that, everyone, hey, I'm running this video a little bit long. I want to wish you all the best today. Remember, keep a close eye on this data today. Hopefully you're protected because there won't be much you can do about it before the market opens to protect yourself. Hopefully you've already protected yourself with the warnings of this week. Make sure that you be really careful with chasing this market because I would anticipate the possibility of some big whipsaws possible as well, where we might gap one direction and whipsaw it back. So make sure you're planning your trades very, very carefully and protecting your capital. With that, everyone, I want to wish you all the best, and I will see you right back here Friday morning. Have a great day, everyone.